Welcome to Inside India. Happy Friday. I'm Amintot Singh, and these are your headlines. Oil prices pulling back a bit in Asia trade after climbing past $80 a barrel overnight. Iran continuing its strikes across the Middle East as we enter the seventh day of US-Israel's attacks on Tehran. As global oil flows remain stalled in the Strait of Hormuz, U.S. Treasury Secretary Scott Bessent grants India a reprieve, allowing New Delhi to buy Russian oil for another 30 days. There are some other conditions. The oil hit rupee strengthening after Bessent's comments and after the Reserve Bank of India likely intervened to shore up the currency. Indian markets poised for more downside though today, following pressure across Asia this morning. All right, let's kick things along with the Asian markets. Asia really tracking Wall Street's losses overnight, but a little mixed as what happened on Wall Street was all around that uncertainty. When will the Iran war conflict really end? It's all about timing. This is also interesting to note that there were some other developments on the global trade front with the U.S. Court of International Trade ruling on Thursday that companies were entitled to tariff refunds from Trump's duties that were struck down by the Supreme Court. But APAC markets, take a look, still mixed. Japan's Nikkei, very interestingly, up about 0.3%. The Nikkei was up about 0.24% earlier in the trading session, but it has reversed earlier losses, while the Topix was marginally down. But South Korea's Kospi, once again, we're looking at it down about 1%. But notably, the defense heavyweight LIG next one was up more than 15% at one stage after South Korean media reported its air defense systems were used to successfully intercept Iranian missiles launched at the UAE. With China's two sessions currently ongoing, the Hong Kong Hang Seng Index is also something we're watching very closely. And at this point in time, it's up about 1.3%. The Shanghai Composite is also up, but a lot lesser, 0.2%. Perhaps we'll watch how that evolves in China. The developments keep coming in. Now, the Indian markets come online in about 45 minutes. GIFT Nifty futures are indicating a slightly negative start. Given what we had yesterday, 24,765 at this stage, 24,647 is what it's indicating. But there's still some time for some digestion to take place for traders, investors, given there have been many developments. And I want to just point to that. The first one, most importantly, is what Scott Bessent has done in terms of a waiver for India to go ahead and buy Russian oil. Now, yesterday, the Nifty did end a 3-day decline, and it did well, 1% up, tracking other global markets. Remember, we're also watching the rupee because potentially you could see it strengthen. At this stage, it's at 91.5. It had hit the low, a record low of 92 plus. And there was likely intervention from the Reserve Bank of India, according to traders. So we'll have to wait and see how things really evolve. But let's give you the latest. The Israeli military says it has begun a broad wave of strikes on Iranian infrastructure across Tehran as the war enters its seventh day. Iran retaliated yesterday with strikes across the Middle East, including Azerbaijan, Bahrain, and the UAE. And that's why we're tracking the latest in oil prices. They've been under pressure just a little bit this morning after jumping 5% yesterday and sending WTI crude above $80 a barrel. And currently, as we see it, it's at 79.58, Brent at 84.31. The war in the Middle East continuing to really choke oil and gas flows through the rest of the world. India and China are some of Iran's biggest energy export markets. And, the Strait of Hormuz, really, and have been seeking passage on that strait or alternative sources of oil, really, to manage these new bottlenecks. And that's why we have this latest development that's coming up for you. The U.S. Treasury Secretary, Scott Bessent, posting on X just this morning saying that the U.S. has given a conditional 30-day waiver to allow India to buy Russian oil. Question is, did India ever stop buying Russian oil? It didn't. But let's just break this down for you. Here's the operative part of Bessent's post on X. The waiver is meant to keep oil flowing into global markets and applies only to Russian crude already stranded at sea, he says, calling it a short-term stopgap aimed at easing pressure after Iran's attempt to take Global energy hostage. Besant also added the measure won't provide any significant financial benefit to Russia. Remember, India imports nearly 90% of its crude oil needs, and US pressure had made India reduce its Russian oil purchases from about 34% in November to around 20% in February. What it didn't buy from Russia, India had started buying from the Middle East. But Operation Epic Fury in the Middle East, where over half of India's oil flows transit from the Strait of Hormuz, it forced Indian oil firms to really scramble for alternatives. The government too held several meetings, but things got interesting just yesterday when two vessels carrying Russian oil or Urals arrived in India after initially signaling East Asia as a destination. Something changed. We spoke to Sumit Ratolia, lead analyst at Kepler, and he confirmed this development and added that this doesn't mean new buying, but rather India offsetting disrupted Middle East supplies with Russian barrels already on the water. A spokesperson for India's oil ministry told us on Thursday that India's government is diversifying purchases from all over the world, and it never said it won't buy Russian oil, but did not comment on the specific ships that we just spoke about. Now, the question is, did these vessels come before or after the US waiver? Also, several analysts are saying that India's real concern, perhaps at this point in time, isn't oil, it's LPG and LNG. And while the details around how India is really recalibrating its sourcing of gas remains in the works, there's another concern, and that's trade. Thousands of containers carrying rice and other goods are stuck at Indian ports or on vessels near the Strait of Hormuz as shipping routes remain uncertain. Anirudh Lele, the CEO of the Nhava Sheva terminal, one of the largest ports in India, the Jawaharlal Nehru port on the west coast of the country, he told CNBC, spoke to me, and he said that anywhere between 4,000 to 5,000 containers are stuck at that port. He said, we're not even counting the other two major ports, that's Mundra and Kandla, which could have similar numbers of containers. Lele estimates more than half of the containers at the port that he's at could be carrying rice. And that's nearly 3,000 containers carrying around 400,000 metric tons of rice intended for the Middle East. He says shipping lines are now diverting cargo to smaller regional ports such as Khor Fakkan and Sohar. These are interesting to note because they're just before the Strait of Hormuz, one in the UAE and the other in Oman. But these don't have the storage capacity of some of the region's main hubs, such as the port of Jebel Ali. Officials of the All India Rice Exporters Association also spoke to us, and they said that they have sought government support but aren't hopeful of an immediate solution. And with the conflict ongoing, the economic impact just remains uncertain, especially as perishable shipments, including fruits, vegetables, and other goods meant for Ramadan, they remain stranded. For now, ports say they can store the cargo while new export contracts are being delayed or put on hold. To make sense of all of this, we have Daniel Lam. He's the head of cross-asset derivative strategy at Standard Chartered Wealth Solutions. Really appreciate you joining us, Daniel. There's a lot to digest for traders, for us, in terms of the headlines, the information that's coming in. But I want to start by talking about the post from the U.S. Treasury Secretary. You already perhaps heard what I said, but do you expect the Indian rupee to strengthen basis off that?
Well, I believe there would be some kind of strengthening. Net is a positive news. But I do believe that the main driving factor is still going to be the tension in the Middle East, right? If there were to be further escalation on the situation, or if the situation lasts longer than what most people are expecting, then the emerging market in general would remain shaky, both in terms of the currencies and also in terms of the stock market. Now, we're expecting that the war would be lasting for a few weeks. That's our base case scenario. Okay, so it lasted for a week already, so 2 more weeks to go. But anything beyond that would start to get people a little bit more uncertain and worried.
You know, anxious was a word used by the Indian government when they referred to the current situation in the Strait of Hormuz. And I'm trying to get a sense, difficult to make a calculation, you already indicated that, but how much of a positive would it be for the Indian market from this particular development that Russian crude, is something we can now legally buy, even though we were already buying it, and I'm talking about India right now when I say we. Russia cannot substitute all of the oil India was getting from the Strait of Hormuz, but it will increase purchases from the US and Venezuela and other parts of the world is what I understand India will do. So what's your take on that?
Well, basically, it will take time in order to increase the purchase of, buying from the other partners, right? So what I'm trying to say is that the volatility is probably going to be, here to stay for the near term. You can have days of short covering like what you are probably going to see, right, in terms of the Indian equities or the rupee, but the trend is still going against, right, until the Middle East basically get resolved or de-escalate.
Analysts saying that the real concern for India is LPG and LNG more than oil, and reports suggesting India has already rationed its reserves. For instance, GAIL India's stock is down about 7% in India. So will the market keep this in mind as it digests this, well, in some sense, oil relief?
Yeah, that is another concern. I mean, that's part of the reason why, because Asia in general, and India also, right, of course, is very much dependent upon the energy side of things. So that's the reason why you're seeing the underperformance of Asian equities versus, say, the equities in US or Europe, right? And this situation is probably going to persist.
Okay. Given this news, where do you see oil prices go to? Oil prices are still rising, but Asian markets have stopped falling. For now, it's kind of mixed. How long can this, let's say, calm last?
Okay, there are a few factors at play. So, of course, in Japan, there is the underlying stimulus that the prime minister is pushing. And in China, of course, you have the two Congress. And there has been some news about them boosting their internet plays and the technology side of things. So they have their own idiosyncratic news that can kind of somehow offset what is going on in the Middle East, but not completely nullify, right? Just offset somewhat. And in terms of the oil prices, our target for the short term has already been reached, because we believe that the tension can take the oil prices, the WTI crude I'm talking about, right, can take that above 80, which happened overnight, right, yesterday. So basically, we are at the stage where if there were to be further escalation, then it can go higher, right? I don't rule out the possibility of that going to 90 or to 100. But that's for further re-escalation. If the situation remains it is and slowly die down, then we can expect the crude oil to be coming back to the low 70s level and possibly to the 60s, because there's still oversupply overall in oil globally, right, before this tension happened.
How do you read this? Because we're getting snippets of headlines, information, reports, and sources all across the world. Iran, back-channel conversations, negotiations, suggestions that could happen, even though Trump has said that it's too late. But these first signs of back-channel pressure from other countries also emerging. Does this mean that we could see these two sides come back to the table? And in that scenario, how does the market respond?
Well, the U.S., so far, they're not sending in the ground troops, right? So their way of the military engagement this year around has changed versus what they have done previously, right? So you look at Venezuela, look at Iran now, they're not sending in the ground troops. So they too want some sort of, negotiation with Iran, right? But only to tilt their agenda to their side, right? Because of the military strike. So, the way I see it is that is, what we are likely to see in a couple of weeks' time. We do believe that there's still going to be some battle going on, but after a couple of weeks, both sides should be coming to some sort of negotiation, right?
Okay. How does one invest in this situation? What's the strategy right now? How selective does one get on regions or sectors?
Very tricky, extremely tricky right now. Okay, so there are a few items here. So for those who would like to protect and who wants to hedge, the oil prices, of course, right now is gone to 80. So that's quite high, right? If you take a longer term perspective, say a 2 to 3 year horizon at $80 is high for WTI crude. So do you go and buy the upstream oil stocks? Not the best way to do it, right, for hedging. However, you can look for selective stories in the energy sector because energy sector overall is still underweight by many investors. So you're looking for the oil stocks that are more integrated, because the more integrated players, they're exposed to the volume expansion. And we have seen a number of companies having volume expansion and reasonable margin, right? Even, before this tension. Okay, so it is because the global economy is picking up, right, in terms of growth. So those will be the ones to look for, and also the ones involved in oil infrastructure where they can benefit from the rebuilding in Venezuela. Now, the other one to look at is, of course, the gold and the gold miners. Okay, so gold right now is 5,003, around that level. So at the moment, fairly priced for gold. Okay, if there's more tension, they could go higher. But we would be advocating a gradual approach into adding gold, right? So around the current level, and 48, 4,900, that will be a good time to add. And also, if gold falls further, right? If it retreats further because of US dollar strengthening, then you can look at gold miners, because gold miners are enjoying expanding margin and a lot of shareholder share buyback, increase in dividend, etc. So those are looking good.
Yeah, the macro environment clearly supportive of gold. I just want you to dive a little bit deeper into what's happening in the US. How do you view the inflation story there? If energy prices remain high and keep climbing, how does Trump put pressure on the Fed to cut rates? Can we assume the Fed will hold now? And how does Asia react to that?
Yeah, that is another tricky question, right? So the effect on inflation, people are already pricing in fewer than 2 rate cuts for the rest of this year, right? That's versus 3 rate cuts that people were expecting even like a few weeks ago. So that's a big change. And basically, in order for Trump to be putting pressure on the Fed to be cutting more rates, it is quite difficult, right? Because the energy price is standing what it is. So I would imagine that what they need to do in the US is actually to ramp up their own oil export, right? You talked about the fact that India is looking to diversify and buying from other places, right? So including the US, because the US is a net exporter of oil. So they need to ramp up their own production. He needs to work with the energy company to ramp it up, and then to try to lower the oil prices by putting in the supply there. And that's the reason why I said that when you look for energy stocks to buy, go for the integrated companies and those that can benefit from the volume growth. I think that would be the one that he would be working on, right?
Okay, I was going to ask you about that, and it's interesting you mentioned what Scott Bessent has said. Scott Bessent has already said that in his view, India will buy more from the US. But talk to us a little bit more about the opportunity in this crisis. Assuming the conflict doesn't last more than 2 weeks, where should investors have their focus? And I know you already mentioned certain sectors, but just help perhaps Indian investors, Asian investors understand how it's different for them.
Okay, so I would like to quote the Iraq situation back in 2003, right? Because if you look at what happened in Iraq, in the first 10 days, the S&P 500 was down almost like 7 to 8%, right, in terms of equities. But after the 30-day return, after the invasion in Iraq, S&P 500 is already up like 1.5 for that 30 days. So what I'm trying to say is that, yes, there's a lot of fear in the market, especially in non-US equities, because they're more affected they're importers of oil, so they're more affected. Nonetheless, I feel that there is buying opportunities there, and you can see that the underlying trend of, say, AI is still very much intact. If you look at the latest results from the big semiconductor companies, they're all guiding higher and saying that the demand for AI semiconductors is still going to grow. So that's the underlying trend. I mean, people have a lot of fear and they deviate from that longer term perspective. But use that as an opportunity to be adding certain sectors in technology, especially the semiconductors, because they're still very much in demand.
There's another theme that I want to talk to you about, private credit. non-bank lending. The warnings have been coming for some time now after JP Morgan CEO Jamie Dimon warned in October of cockroaches lurking in private sectors, in private markets, fears of contagion. Now, from Blue Oil Capital Inc. to Blackstone, private credit funds across the industry are facing a wave of withdrawals. So your view on that and how it's potentially opening up opportunities for other asset classes?
So yes, so there has been all these news about the redemption, etc., right, on private credit. But I would like to say that in terms of the proportion of the lending, the private credit is still actually a very, very small sum. So what that means is that, is it going to lead to a systemic risk? My feeling is that the probability is low at this moment still, right? And also it is going to open up opportunities for the stronger fund managers to grab these opportunities in private credit. Okay, so that's for my view on that. But how does that open up for the opportunities? Well, I would say that these are alternative assets, right? So if you look at the alternative asset space, there are areas where opportunities arises a lot. For example, equity long short, right? Those are massive opportunities. Just look at the rotation that we've seen in the markets amongst the sectors. S&P 500, if you print that S&P 500 chart and you lay it out to someone who does not know finance, they're going to ask, nothing is going on. It's flat line. It's high, it's flat line. No worries. But we all know that a lot of things have gone very volatile, right? Like there's a lot of sector rotation. Tech, software coming off, tech coming off, rotation into value sectors like defense, like energy, etc., etc. So the long short managers, if they're skillful enough, there's actually a lot of opportunities to capture that alpha, that deviation amongst the sectors. So I would say that people are going to rotate away from private credit into the other alternative assets, like the hedge fund, like the long short funds in particular.
All right, Daniel Lam from Standard Chartered Wealth Solutions, thanks so much for bringing us all of that perspective. Now, India expressed condolences over the death of Ali Khamenei, with Indian Foreign Secretary Vikram Misri visiting the Iranian embassy in New Delhi on Thursday to sign the condolence book on behalf of the government. The Iranian flag at the embassy was flown at half-mast as diplomats gathered to pay tribute to Khamenei, who led Iran for more than 3 decades. India's foreign minister also dialed in his Iranian counterpart. Coming up, China setting a low growth target at the country's most watched annual policy event and looking to new avenues to lead this growth. What's behind this pivot? We'll get you more after this. Welcome back. Hong Kong markets are the bright spot in Asia markets today, driven by a 3% jump in the Hang Seng Tech Index. China announcing just yesterday that it's pivoting its growth model to focus on tech and AI. CNBC's China reporter Elaine Yu is live in Beijing, getting us the latest from the country's most watched annual policy meeting, the two sessions. Elaine, what's the latest now?
Yeah, the highlight really is China pivoting to a new growth model, slightly marking down its growth target to a range of 4.5 to 5%. And this is Beijing acknowledging that its old growth model isn't really sustainable. It's that its traditional growth drivers are weakening, its population is aging, the global growth is slowing down, and geopolitical risks are rising. And so instead of focusing on the speed and quantity of growth, it's about the quality of growth and finding new drivers. And at the heart of this is tech, innovation, and AI. Beijing's new phrase for this is shaping new forms of the intelligent economy, and that includes promoting commercial and large-scale AI application across key industries, cultivating new AI-native business models, and deploying AI across tech, services, and the full industrial chain. And CICC, the Chinese investment bank, said that the emphasis on tech application here is notable. And Morgan Stanley also said that the focus on hardcore tech and innovation stands out, which is consistent with their preferences on sectors like chips, aerospace, biotech, and the low altitude economy as well. And that includes things like drones and other vertical aircraft. And efforts to curb overcapacity and excess competition were also featured. This is called anti-involution, and this is something watched by China's trading partners and also investors concerned about how the price wars and excess competition are weighing on profit margins. So Morgan Stanley said that they expect anti-involution to continue with customized plans for at the sector level. So we'll watch for any measures aimed at EVs, solar, and retail and e-commerce industries as well. Amatosh?
Elaine, thanks so much for that. Really appreciate it. We'll, of course, come back to you very soon for more details. For the moment, we're going to take a short break. We'll be back in two. Welcome back. You're watching Inside India, but let's head to Bangkok now. Our East Asia reporter Lisa Kim is on the ground leading our coverage at the IMF's Asia in 2050 conference. Lisa, great interviews that you've been getting us. What do you have for us today?
Hey, Mathaj, that's right. So I am on the sidelines of an IMF event here in Bangkok, and earlier today I spoke with the South Korean AI chip startup Rebellions' co-founder and CEO Sung-hyun Park, and he told CNBC that his company has hired an American bank to help it go public in South Korea, but he refused to confirm the reported time frame. What's also interesting is that he told us that he's open to listing elsewhere, and of course, this is a startup that is seeking to challenge NVIDIA's dominance, and market watchers will continue to watch whether some of the major hyperscalers will start switching to Rebellion's chips. That's the Rebellion's interview. But for now, let's pivot to monetary policy making. And for that, I have Ellie Remolona, who's the central bank governor of the Philippines. Thank you so much for joining us.
Hi, Lisa.
Yeah, let's start with the war in the Middle East.
Yes.
That's front and center in this IMF event, as one could expect. So the Philippines, along with a lot of other Asian economies, are dependent on imported energy. The exposure has caused the Philippine currency peso to depreciate. The last time I checked, it had depreciated around 2% since last week. So how concerned are you about this as a policymaker?
We're somewhat concerned. The peso depreciation was really a dollar appreciation. So the peso looked like it depreciated, but it did so along with other currencies in the region. The dollar went up 2% because of safe haven flows into the dollar.
Are you concerned about the dollar strength on the peso?
For now, no, but there's a risk. Dollar strength combined with a sharp rise in the price of oil and a persistent rise in the price of oil, that could cause concern about inflation.
And so what are the downside risks that you are preparing for?
There's some downside risk in terms of demand for our labor services. We're a major exporter of labor services. We have 2.5 million Filipinos in the Middle East, and they send money home, a lot of money home. About 18% of remittances come from the Middle East. So that's a concern, but our priority in terms of the Filipinos in the Middle East is to keep them out of harm's way and possibly bring them home.
So speaking of remittances, they play a big role in your country supporting
That's right.
consumption and also demand for currency.
Yes.
What level of disruption do you anticipate with regard to flows from the war in the Middle East?
So the Middle East remittances account for 18% of remittances into the Philippines. 18% is very, very significant. So that's the main issue in that respect. But the bigger issue is the inflationary consequences, the possible inflationary consequences.
So the Philippines has been sort of at the end of its rate cutting cycle.
Yes, yes.
But will the new developments mean a reversal, as in a rate hike being in the cards?
We'll have to see. But for now, where the price of oil is and where the dollar is, we don't see the need for a rate hike. So for now, we're where we want to be in terms of monetary policy.
At what point would you consider a rate hike then?
Yeah, at some point, if the price of oil goes to say $100 a barrel, and the dollar continues to strengthen, then we'll have to consider a rate hike.
And we're at an IMF event, lots of panels going on. I know you took part in that one, but you also attended it as an attendee to sit in on a lot of the discussions that are happening. So tell us about some of the new information that caught your attention.
No, I found interesting the very first panel, which was about the interaction of growth and economies across the big continents, the big regions of the world, but especially within Asia, the interactions between China's growth and growth of the other countries, which has been largely based on manufacturing growth and manufacturing exports. the Philippines seems to be a bit different. Our growth has been largely growth in services, so maybe there's a potential for cooperation given that the comparative advantage is different across the region.
And speaking of China, the country has a big political event underway,
Yes.
setting the lowest growth target ever. How are you factoring that into as it relates to the Philippine economy and trade?
Well, they're factoring in, they're accepting 4% growth, which is still very respectable. It's still, compared to the rest of the world, we're in a kind of similar position. Our growth now has been at 4.4%, very respectable, but our potential is more like 5.5%. So we're hoping to get back on track and grow at our potential.
Right. So from U.S. tariffs to this conflict in the Middle East, really we're living through heightened volatility and uncertainty. How does this complicate policymaking for the Philippines and particularly Asian emerging markets?
It complicates things, of course. The tariffs have not been a big deal in the end. It was more the uncertainty of what they will be, but given what tariffs are seeing now, it's very manageable, and I think that's true for most of the region. In the meantime, we're strengthening our ties with the region. We have a big ASEAN meeting in Manila for the whole year in 2026. So we're going to take advantage of that to strengthen ties within ASEAN.
Does that mean new trade agreements in the pipeline?
It means better trade agreements. We already have an ASEAN trade agreement, but it will maybe better. It means deeper integration of our capital markets. It means for us more efficient cross-border payment systems within ASEAN. So it's a good opportunity for us.
What monetary policy tools are at your disposal to ensure price and financial stability at a time of this really heightened volatility and unpredictability?
We have 1.5 policy tools. The main one, of course, is the policy rate. That's one policy tool. But we have 1/2 of a policy tool in the form of forward guidance, where we try to explain where we think we're going and what the uncertainties are around that path. That itself is very helpful as well.
Do you envision any changes to the forward guidance?
I think so. I think given what's happened between our policy decision in mid-February and what has happened at the end of February, yes, there will be a change.
Growth in the Philippines slowed to 3% in the fourth quarter of last year, and your bank expects economic growth to average, let's say, 4.5%, around rough 4.5%.
For the year, yeah.
Yes, so what sectors do you expect to lead this growth?
Well, services usually leads the growth, and we expect to be back on track, close to our potential by the middle of 2026.
Thank you so much, sir.
Thank you, Lisa.
So that was Eli Remolona, Central Bank Governor of the Philippines. It's back to you, Amitaj.
Lisa, thanks so much for that. Really appreciate that reporting. We'll come back to you as and when there are more developments. Now, back to the latest in the Middle East. Iran's foreign minister ruling out the possibility of a ceasefire, telling NBC News that Tehran has not and will not contact the U.S. to make a deal. Listen in.
We are not asking for a ceasefire. And we don't see any reason why we should negotiate with the U.S. When we negotiated with them twice, and every time they attacked us at the middle of negotiations. So there is no request for a ceasefire by us, and there is no request for the negotiation with the U.S. From us. We have never sent any messages to them.
President Donald Trump from the U.S. says Washington should have a role in choosing Iran's next leader following the death of Supreme Leader Ali Khamenei. Speaking to Reuters, Trump said the U.S. should help select someone who would be good for the Iranian people and avoid future conflicts. Trump said Mujtaba Khamenei, the son of Iran's late supreme leader, is, quote, unlikely to become the next leader of Iran. The 56-year-old has been a popular pick amongst clerics as a successor and would extend Iran's hardline rule. Trump also said he would support Iranian Kurdish forces launching attacks on Iran's security forces. U.S. firm HKN Energy has halted production in Iraqi Kurdistan following a drone attack on its oil field. Meantime, Finland's President Alexander Stubb warned of a growing return to power politics in global affairs, saying the use of force is increasingly shaping international relations. Speaking at the Raisina dialogue in New Delhi, Stubb pointed to the war in Ukraine as a clear violation of international law and highlighted rising tensions in the Middle East. Listen in.
We live in a time of power politics, a time where might seems to make right. Violence has once again become a go-to foreign policy tool used around the world with very little restraint. In Ukraine, Russia is trying to subjugate a sovereign country through a war that is a blatant violation of international law. The way this war will end will have major consequences, not only in Europe, but globally. It is in all of our interests that the outcome does not reward the aggressor. In the Middle East, the events have taken rapid turns. We're now witnessing a regional escalation with countries who were pushing for diplomatic solutions.
He also said another thing, Alexander Stubb, saying that, while praising India's diplomatic approach, saying the world could learn from how India manages complex global relations. Speaking about international cooperation and strategic balance, he suggested that countries should become a bit more Indian in their diplomacy. Meantime, China is in talks with Iran to allow safe passage for oil and gas ships moving through the Strait of Hormuz as the war in the Middle East disrupts global energy supplies. And sources telling Reuters that Beijing is pressuring Tehran to ensure Chinese oil and Qatari LNG vessels, very crucial, can pass through the key energy corridor. Shipping through the strait has dropped sharply since the conflict began, leaving hundreds of tankers stranded in the region. We're counting down to the market open in Mumbai in just 3 minutes, and we are back in 2 minutes. Welcome back. It's, well, we're just having the online 50. We've been watching very closely. At this point in time, we were looking at the figure of about 24,700, and as the markets have started opening, and they have opened now, we're looking at a downside. As we've seen, generally speaking, in Asia, a mixed market sentiment. 24,600 at this point in time. It's interesting to watch how the rupee is strengthening against the dollar, 91.61, when it has hit the record lows of about 92. We're also looking at bank stocks. Those are the ones in India currently slightly down and dragging Nifty 50. Remember, IT services is the only sector which has been in a bad space, but given what's happening to the rupee, it's been in a better space, slightly better. But now you have these comments that have come from the U.S. Treasury Secretary Scott Bessent that will see India go ahead and purchase Russian oil, or if it was already doing that, that may have a reverse impact on the IT sector particularly. Now, a quick look at oil refining and marketing companies in India rising in trade today after reports of the companies looking to buy Russian oil to offset the impact of disruption in oil flows from the Middle East, and also the comments coming from Mr. Bessent, as I was mentioning. Given that 30-day waiver to India to buy Russian oil. At this point in time, you're looking at the biggest gainer being, Chennai Petro, 2.29, 2.34 actually. And Oil India also, interestingly, up 1.7 or so. We keep watching this space. And let's also bring you up to speed with what's happening with India's gas supplies. They've been coming under pressure as the conflict in the Middle East disrupts LNG shipments. State-run gas distributor GAIL India, that's interesting to watch. That is down about 1.5%. It says it may curb supplies to customers after a force majeure notice from importer Petronet LNG Limited, whose tankers have been unable to reach Qatar's Ras Laffan export terminal. GAIL says LNG allocations from Petronet have fallen to zero since March the 4th, forcing companies to reassess supplies. So we're watching this space very closely. The conflict in Iran also sending fuel prices sharply higher, adding pressure on the aviation sector. Gas prices have surged more than 25% this week, while jet fuel prices in Asia have climbed to record highs. Now, that's a major concern for airlines, particularly in India, where the routes to the Middle East are among the busiest, driven by a large Indian diaspora in the region. In fact, the largest. The Gulf also serves as a key transit corridor for flights between India and the West, meaning disruptions can ripple across global networks. Airlines including Indigo, Air India, and SpiceJet are already facing operational challenges as the conflict escalates. To talk about that and more, we have Mark Martin. He's the founder and CEO at Martin Consulting. The latest numbers that we're getting right now, Mark, is interesting. More than 50,000 flights emanating from the region in the Middle East, 25,000 or so cancelled. What's your take on this? I want to just start by understanding that, paint the picture, because you have the Middle East as one of the world's most critical aviation corridors, and you have the disruption in the airspaces across Iran, Iraq, and other parts. How disruptive is this? Quantify that for us.
Hey, morning. Thanks for having me. I think we have to understand that the Middle East is 95% driven by expatriate population. They're not domiciled or locals, and for them to get back over to maybe India, the Philippines, Pakistan, the UK, you're going to need a minimum conservative of about 2,000 more aircraft operating roughly about 22,000 flights. Okay. Now, what the strategy of the Middle Eastern government, especially in the UAE, is to keep everybody calm and assure them by, we're doing everything to keep you safe. Look up there, we got the French Rafale jets protecting you. There's nothing to panic. Stay in the UAE. Do not leave. And I think that's the bigger message here, because if everybody starts to leave and panic, we're going to look at a major humanitarian crisis. And I'll be honest with you, none of the airlines over in India or Malaysia or Philippines or anyone in the region would be able to deal with that kind of demand. You've got almost 1.8 million Filipinos over there in the UAE. You've got 4.3 million Indians. You've got 1.7 million Pakistanis. You've got 240,000 British nationals. Just to handle that humanitarian evacuation is going to need at least close to 22,000 flights. And the total cost of this is going to be 7.74 billion. And the bigger impact that we see is very well pointed out, the rise in fuel prices. Jet fuel is up to an all-time high. Oil is now trading at 85, 87. It's the futures market it's much higher. It's going to go up to 115. The dollar was 88. Now it's 91 on the rupee. Currencies are getting impacted across the world. So this is just the tip of the iceberg. And if we're not going to be careful with the way we're doing this, or if they're being very frivolous in the approach, whether it's Iran, the U.S., or Israel, this is going to go out of control. And given our current financial situation across the world, I don't think any countries or anybody is going to stand up and pick up that tab of $7.74 billion to evacuate its population. So this is tough times, and the key message here is, either you stay in the UAE and keep quiet, or things are going to go into the world's biggest humanitarian relief effort, bigger than the Berlin airlift we saw in World War II.
Okay, on the scale of worst case scenario to best case scenario, you've painted a picture of the worst case scenario, but the middle scenario is a short-term operational disruption. That's what most analysts are referring to. That's what they believe. So in that context, could this become still, in that short-term operational disruption crisis, could this become the biggest aviation routing crisis since the Russia-Ukraine war shut off the northern corridors?
Oh, yeah. Clearly, I think what I painted was a doomsday prediction. But the best case would be purely dependent on de-escalation. If Israel, US, Iran de-escalate, bury the hatchet, end this in this week, then we're looking life coming back to normal, everything status quo. But from what we're seeing in the last 5 days, it just seems to be escalating day on day. There seems to be no end to this. And that's my bigger fear here, because it's not just that. Airbus is going to be affected as an OEM. Boeing is affected because their production lines get impacted. And secondly, you got aircraft grounded that can't go to the world's busiest aviation market. Look at the revenue from airports, airlines. Conservatively, we expected a 1 week loss of roughly about 1.2 billion. If this continues, that's 1.2 billion is just for India. So that means if you start adding in most other markets, it's at least 5 billion a week, and that's 20 or 30 billion in a month. So it's unprecedented. We've never seen this before, and clearly, all focus now shifts to the next couple of days, and we're hoping at least by next Wednesday, there is a de-escalation. There's a peace deal on the table, and at least flights can resume back, and people don't really leave the Middle East.
I just want to dive a little deeper into jet fuel prices. They've been trading in Asia. Singapore rocketed 72%. To about 225.44 a barrel on Wednesday. We're also looking at other record highs. The spot price of jet kerosene gained about 140% since the close of, it was in 93.45. This is obviously starting from February 27 when the conflict really broke out. And at the same time, you have jet fuel tending to have these lower inventories because of specialized storage. So my question to you in that context is, are we now seeing the consequences of that structural vulnerability really now, in the refining system, which could potentially impact the whole sector?
Oh yeah, Amritej, this isn't. The sector was already under tremendous strain before the Iran-Israel-US conflict began. We've got Ukraine, we've got Pakistan with Afghanistan. We've got Venezuela. So what we see and what we note that happened back in December, January is because of Venezuela. That led to this. Now, what we're seeing is far too many oil economies getting impacted in far short time. And this is what, as you rightly mentioned, that's what created the spike about 30 or 45 days ago. So it's Venezuela. It's, of course, so Ukraine predates Venezuela. Then you got your conflict in Afghanistan, Pakistan, and now we've got a new conflict. So, 20% of the world is conflicted at the moment. And this is going to drive oil prices far higher. And especially with oil supply, the cost now, refineries if refineries don't get oil in the next 15 days, the refineries are going to shut down. So, we're dealing with possibly a catastrophic oil economy situation here. And the only solution, Amritej, is, we're going to need a peace deal fast to at least save what we have and move on.
Briefly speaking, is India disproportionately hit than most other countries because it had crisis after crisis in the last couple of months, and at the same time, and I'm saying this in the context that Air India, Indigo and SpiceJet, they're all adding different flights, avoiding the Middle East to make sure that they don't have these big losses and they can compensate?
Absolutely, yes. We saw what happened to Indigo in November, where they chose to not comply with the regulation. They had to cancel 2,000 flights a day. Okay, this went on for 7 days. Plus, then we got into a conflict mode. Pakistan is still a no-fly airspace for aircraft in India. So guess what? We got to circumvent Pakistan, Afghanistan, get over to the UAE, and then go to Europe. Now, the UAE, Afghanistan, Saudi Arabia, Iraq, Iran, Jordan, Israel, everything becomes a no-fly zone. So an average aircraft from India has to go all the way down to Sudan and Somalia and then fly north. Operating cost is gone up by almost 50% per ticket. So is flying time. So that's an impact.
Thanks, Mark. Really appreciate that. Mark Martin from Martin Consulting. That's all the time we have today on Inside India. Keep watching CNBC. Our focus shifts to the Middle East now. Access Middle East is up next.